The price of both WTI and Brent are at four-year highs and climbing. The news recently that the US is withdrawing from the Iran nuclear deal has been cited as one of the reasons behind the latest push higher. But clearly there's more to think about. Joining us now on the line is Malcolm Graham-Wood, founder of Hydrocarbon Capital and author of Malcy's blog. Malcy, let's first of all begin by putting this recent rise into some sort of perspective. WTI was at $43 back in June 2017. Here we are now at $71.50 and Brent $5 or $6 higher. What's been behind this move up that we've seen in the last year or so?
Well, the existing rise that we've had has been entirely down to the fact that the OPEC and non-OPEC agreement, that is, the Saudis with Kuwait and the leading members of OPEC getting together with the Russians in particular and cutting production. We've spoken about it before, but they realized that if they were to get anywhere in terms of increased revenues, that the flooding the market was no longer any good. Took off the Americans, but that didn't really count. And so taking 10 to 15% off everyone's income has put initially 20% on, but now 40% on their monthly revenues. So it's proved that it's worked very well, and remarkably for OPEC and non-OPEC, there's been very little cheating. In fact, I would suggest that the only people that cheated at all were pretty much Iran, who I suspect in the last few weeks have been pumping for dear life because they know that they won't be able to do that for very much longer.
Well, I think this is interesting, isn't it, this business about what's happened with the US deciding to withdraw from the Iran nuclear deal. Is this tick up in oil because of that momentary, or do you think that itself has legs to take oil higher from where we are?
No, I think it has legs, because what you have now is once President Trump had pressed the button the other day that there's 180 days of grace period for people to decide who they're going to do business with, and so we'll see some continued significant production from Iran. But as you move towards the winter, of course, you're going to find that something between 500,000 and 1 million barrels a day will come off the market. That's we've had a good guide from that before because previous sanctions. And the point is that is going to meet at the same time as what I've been talking to you about, which is the fact that the reduction from OPEC and non-OPEC has successfully put the price up, but it's also, their plan was always to try and get world stocks to be down to the 5-year average, which is they consider that to be very important. So in fact, last month it got to the stage where world stocks are pretty much at the 5-year average. So the second half of this year, I was already expecting things to get a bit tight. I've been more positive than most on the oil price, and those numbers will be going up a little bit. But in the second half of this year, I expect to see, a draw on OPEC of, something in the region of 32.5 million barrels a day. And at the moment, if they kept their production the way it is, there isn't enough supply to go around, which will inevitably push the price up.
Sure. I want to push you further on the price of oil in just a few moments, but does this US withdrawal from the Iran nuclear agreement change anything for OPEC and their agreement? I mean, this OPEC agreement is, of course, as you said, OPEC and non-OPEC, isn't it? Because Russia's involved, one of the largest non-OPEC oil majors. Does this Iran decision for the US change anything in terms of relationships amongst the OPEC table?
I think it will a little bit, in the sense that, Saudi Arabia were very quick to come out saying, don't panic about the market being short. We will, i.e. we being OPEC and non-OPEC, we will make sure we manage the situation in international oil markets so that there won't be a shortage. But they say that with slightly forked tongue, because, of course, we know that, although they know that if they got the price up to $100 a barrel, it would be very bad news for global demand. It would be very good news for them. So my guess is that your worry on the downside would be that one or two other members of OPEC, or even the Russians, would suddenly say, well, we ought to just there's going to be 500,000 barrels to share around, or maybe 1 million barrels to share around. We should have another meeting of OPEC to decide whether we do that. I would have thought the Saudis would try and keep that under wraps as much as they can, but there's always a chance that someone would be given a lifeline, or there will just be a general. If the oil price was to run up sharply, another $10 or $15, I would have thought there's no doubt we'll hear that from OPEC and non-OPEC that they're going to increase their supplies a little bit.
Yeah,
in the meantime, I'd have thought there'll be enough around just to keep it in that area.
Sure. Well, we know, don't we, that Saudi's been wanting a higher oil price to fill gaps in its budget as much as anything else. Do you subscribe to the suggestion that Saudi has a price target in mind when it's going to start opening the taps again?
Well, if it got to 80 or 85 or $90, I think they would all put some oil into the marketplace. I mean, the Saudis would love to have $100 again, but they do know that at that stage it would really hit global demand quite sharply. I think that if we saw it creeping up for reasons of genuine shortage, there's no doubt that more oil would be put into the marketplace. I don't think they want to see it too high, whether they've got Saudi Aramco to sell off or not.
Yeah, of course, we know as well that the US is ramping up production. Shell producers are producing a lot more oil than they were even this time last year. How much of contribution is, of course, US is a non-OPEC producer. How much contribution is the US shale business pumping into the system at the moment?
Well, I've been of the view recently that it's not insignificant, but it's nothing like as significant as people think. People were saying during the late summer of last year and the autumn that the Americans would increase production dramatically, and that would keep a lid on the oil price. Well, it's not the case. I mean, the people who keep the lid on the oil price or not will be OPEC. But I'm expecting the US to produce probably in excess of 11.5 million barrels a day next spring. But we're only talking about another 500,000 barrels a day into the marketplace, and that ain't going to touch the sides if the oil price is continuing to go up. I mean, they're doing very well out of it, thank you very much, but
sure.
So is OPEC.
Okay, well, the time has come for me to ask you to nail your colours to the mast and give me some figures here. Let's bring up a chart of Brent to get a better idea as to what's been happening. With this rise that we've seen recently, currently trading at 77.27, 4-year highs that we've seen recently. $80 presumably is an easy stop-off point. Are you suggesting could go higher?
Well, there's no reason it shouldn't go higher in the very short term if we have a sort of any sort of panic or any further geopolitical risk. I've got 80. I'm in my mind that in the last few weeks to change my year-end target to 80. It's probably going to be the interim target as well, because I was a bit lower, but not much lower than that. I think you will get the oil price moving around quite a lot on various different things. But I think if it got to an 8 on it, it would start to come back a bit. And remember that there is no shortage of oil in this world. It's funny we're talking about the fact that $80 and things going much higher and so on, when it wasn't very long ago that people were worried about the fact that that US would produce, OPEC would cheat, and the oil price would still be at $50.
Yeah.
It moves around a lot, but bottom line is that by the end of the year we could have 1 million barrels a day off the market, and that will be very important. Yeah.
Look, okay, we've got to leave it there, but Malcy, thanks for joining us for your time. Malcolm Grahamwood, founder of Hydrocarbon Capital and author of Malcy's blog. Subscribe to IG for educational content, company insight, financial analysis and expert commentary.